This is Stonewood Funding, where legal recovery meets real life. I'm Laura Lee, and today we're diving into a side of personal injury case most people never talk about, the financial cliff that follows an accident. We'll hear from Sarah, a mother injured in a car crash who thought she'd done everything right, insurance, savings, even disability coverage, but none of it was enough to hold back the financial flood that followed. Let's get into it. Sarah was driving home from work when another driver ran a red light. Her car was totaled. Her back and neck were injured. She filed a claim and started the long journey towards healing. But recovery came at a cost she never saw coming. Her disability checks covered only half of her usual income. Her out-of-pocket medical bills topped $8,000. Her mortgage was overdue. 2 credit cards were maxed. Just trying to put food on the table. I never imagined I would be in this position, she said. I had insurance, a good job, emergency savings, but it all disappeared in weeks. Sarah isn't alone. Studies show that 66.5% of bankruptcies in the U.S. involve medical costs, and many stem from personal injuries with pending settlements. Attorney Michael Thornton says it best. Most clients are focused on healing, but by the second or third month, they're in deep financial distress, even if their case is solid. That financial pressure becomes the second injury, one that quietly piles on every week. So what happens after an accident like Sarah's? First, immediate costs, ER visits, surgery, rehab. Even with insurance, patients owe deductibles and co-pays upfront. 2. Lost income. Disability pays a fraction of a paycheck, if anything, and bills don't pause. 3. Housing risk. Mixed mortgages or rent payments can lead to foreclosure or eviction in just 60 days. 4. Utility shutoffs. No electricity, no water. Dangerous for anyone recovering from an injury. 5. Debt collection. Medical providers now send unpaid bills to collectors within 60 days. And 6. Long-term credit damage. A single injury can haunt someone's credit for up to 10 years. Here's the kicker. Most plaintiffs will receive compensation eventually, but the legal process is slow by design, and insurance companies know it. Attorney Sarah Jameson says it bluntly. Clients hear 12 to 14 months and think it's fine, until month 3 when the lights are off and the bank calls. Without a bridge, even strong cases collapse under pressure. That is where pre-settlement funding comes in. It's not a loan. It's a non-recourse advance based on the potential value of your case. If your case doesn't win, you owe nothing. No monthly payments, no credit checks, just breathing room when you need it most. James, a delivery driver who was injured by a commercial truck, put it this way. I was about to file bankruptcy. Then I found pre-settlement funding. Within a week, I could breathe again. Here's how it works. You apply online or by phone. We speak with your attorney to understand the case. If approved, you get funds within 24 to 48 hours. When your case settles, repayment is made from the settlement itself. If the case doesn't settle, you keep the funds, no string attached. We hear concerns like, is it expensive? Compared to credit cards, late fees, or accepting a lowball settlement, the answer is no. And remember, there's no personal liability if you lose. It's a tool to protect your dignity, your credit, and your ability to recover. Sarah was able to use her funding to catch up on her mortgage, pay medical bills, and stay in her home while she healed. If you're in a similar situation, please don't wait. Visit stonewoodfunding.com or call 844-544-3863. We're going to walk you through the process and help determine if pre-settlement funding is right for you, because you shouldn't have to choose between justice and survival. I'm Laura Lee. This is Stonewood Funding, helping you move forward even when your system moves slow.